Welcome to the Deep Dive. We're here to cut through all the noise and really get you the essential insights from, well, the sources that matter most. And today, yeah, Bitcoin is definitely keeping everyone on their toes, isn't it? It's aggressively testing some really key support levels. Feels like a proper tug of war going on. So we're diving straight into the daily chart to figure out what all this volatile price action actually means. Where does Bitcoin stand in what we're calling its correction mode?
That's exactly right. And our goal today really is to take all this expert technical analysis and boil it down into something, actionable for you. We want to give you a clear picture, a concise one, of the price levels that are genuinely crucial right now and the scenarios that could play out, the ones defining Bitcoin's next big move. Without hopefully getting you bogged down in super complex chart stuff, we've looked at some, frankly, really sharp interpretations of the patterns and support levels to help guide us through this.
Okay, great. Let's unpack it then. So looking at that daily chart, you can't deny it, Bitcoin is in correction mode. Now, for anyone maybe less familiar with the jargon, a correction is basically just a temporary dip, a downward move inside a bigger uptrend. And we've been tracking a specific wave structure, right? Since that high point around July 14th or 15th. What's kind of interesting, though, is that the initial bullish idea, what we call an impulse to the upside, from back then, it's actually, for now at least, still intact.
Yeah, and what's fascinating is that while that general impulse idea, a strong directional move, buyers clearly in charge while that's still potentially in play. The depth of this current pullback, when we're seeing on the daily chart, it's actually pretty significant. It's got some analysts thinking, well, maybe we're already in wave 4 of that impulse. Now, in Elliott wave theory, wave 4 is usually corrective, but this one's getting quite deep for what you'd typically expect at this stage. It's definitely open to interpretation, but it shows the pressure, the corrective pressure right now.
Okay, so if that's the picture, let's hone in on what seems like the absolute key here, that 113,800 support level. This number, I mean, it's been everywhere for weeks, hasn't it? And for very good reason, it seems. What makes this specific level just so critical?
It's incredibly significant. This price point is basically the key. It helps us distinguish between, on the one hand, that continued impulse structure to the upside. That's the more bullish path, right? And on the other hand, well, different possibilities, potentially more bearish ones. Technically speaking, it's the 50% Fibonacci retracement of the length of the third wave. And for anyone wondering about Fibonacci, it's just a common tool analysts use based on this mathematical sequence to find potential support or resistance spots, places where price might pull back before maybe continuing its trend. That 50% level specifically often acts as a kind of major rebalancing point. So as long as Bitcoin manages to stay above 113,800, that upward impulse idea is, well, it's still alive. We've pointed this out before as the established pivot, and its importance has just, frankly, grown.
Right. Okay. Now, the big question, the critical what if. What actually happens if Bitcoin doesn't hold 113,800? If it fails there? What are those immediate, early warning signs we should be looking for? And what does that signal about the wider market feeling?
Okay, so if 113,800 breaks, and I mean decisively breaks, not just a quick dip, that's your immediate early warning. It suggests a major top might already be in for this whole current move. And frankly,
Ah.
given how close Bitcoin actually got to that 130K target we were watching, you have to consider it could even signal potentially a bull market top if the momentum just completely stalls out here. Now, there is an alternative scenario, the one we treat with, let's say, less confidence, called diagonal pattern, that could emerge if the C wave, which is part of a bigger correction, isn't playing out like a clean impulse move down. Think of a diagonal as like a trend that's losing steam. It moves within these converging lines, suggesting momentum is weakening.
So less directional power.
Exactly, less power. So the key thing is breaking that 113,800 level significantly shifts the odds. It points towards something more bearish, short-term bearish, or maybe just something less clear, more choppy. And importantly, it makes a retest of those July lows look, well, very probable indeed.
Okay, so that's the line in the sand, clearly marked. But what about right now? The signals on the shorter time frames, the ones that might give us a hint of a shift before a big break. You mentioned the trend on those shorter frames is already down since mid-July. So what specific confirmation signals do we actually need to see to feel more confident a low might be in place?
Right. For a clearer sign that a low is established, what you're typically looking for is the next micro five-wave move up, a small impulse upwards, followed by a three-wave move down. That's the classic routine, sometimes called an ABC correction. It helps confirm the previous downward move is done and maybe a new trend is starting. We're also keeping a really close eye on a potential diagonal pattern, highlighted in yellow on some shorter-term charts. That setup suggests a kind of slow, grinding decline. And if you look at the whole move down from July 14th, technically it could become what's called a complex WXYXZ structure.
It sounds complicated.
It is. It's a very rare and frankly particularly messy kind of corrective pattern. Think of it like the market just really struggling, unable to decide on a clear direction. Lots of chop, unpredictable moves, definitely warrants caution if that develops. We're also watching the trend channel on the charts closely, the lines bounding the recent price action. For a real breakout, a confirmed breakout, we need to see a clean break above the upper boundary line. Because right now, let's be honest, the market is mainly just grinding sideways, oscillating in a range without clear direction.
That is a lot of detail on the short term, yeah.
Yeah.
Let's peel back one more layer, though, thinking about those signals that can sometimes, fake us out. What if we just see a brief break? Like the price dips below 113,800 for a moment, maybe just a wick on the candle and then pops back up. Is that it? Is the bullish case immediately dead?
Yeah, that's a really important point. This is where the nuance comes in, right? A brief break, or just a wick below 113,800. It's actually not an invalidation, not technically. It's more like a shift in probabilities. It means, okay, there was a quick sell-off, maybe some panic, but buyers could still step right back in. It signals volatility, maybe emotional selling, but not necessarily a complete structural breakdown. Now, from a strict textbook Elliott wave standpoint, the real formal invalidation point is actually a bit lower. It's down at 110,550.
Okay, why that specific number?
That number is what we call the wave 1 high from the start of this potential impulse sequence. And the textbook rule, is that a wave 4 must not break into the wave 1 price region. If it does that, the impulse count is definitively broken.
Right, okay, so if 110,550 is the textbook invalidation, why are we putting so much emphasis on 113,800 as the critical pivot? Seems like a subtle difference, but an important one.
It absolutely is. Think of 113,800 as like the market's psychological red line. If it breaks, even for a bit, it really shakes confidence. It's the point where the probability shifts significantly away from that clean impulse structure. You just can't really call it an impulse with confidence anymore, even if the absolute technical rule at 110,550 isn't quite broken yet. So 110,550 is the rulebook failure point. The pattern is technically dead there. 113,800 is more like the practical warning signal, the coach's gut feeling versus the official rule, if you like. The good news, though, for the current setup, that C wave within the bigger wave Z of 4, it actually looks technically complete. It seems to have finished its 5-wave move down.
So the correction might be finished?
It might be. It means one of the more complex corrective patterns looks like it might have run its course. And the market is, right now, attempting to turn around exactly where it needs to keep this particular wave count alive. It's really, truly at a critical spot.
Okay, yeah. All of this just hammers home the point then, doesn't it? If that 113,800 level gets breached and stays breached, beyond just a quick wick, we absolutely need to dial up our caution. Big time. About Bitcoin's ability to push much higher from here, this single level, 113,800, really does feel like the fulcrum, the point on which Bitcoin's immediate future seems to be balancing.
Couldn't agree more. That 113,800 level, it's not just some random number pulled from a chart. It really is the critical dividing line right now. It distinguishes between, continued upward momentum, however choppy, and potentially significant bearish shifts in Bitcoin's near-term path. How the market behaves right around this level is absolutely paramount to watch.
So what does this all mean for you listening in? Well, this focus on 113,800 for Bitcoin. It's actually a classic example of how markets work, how they define their battlegrounds. Pretty much every asset, every market has its own fulcrum points, its own critical inflection levels like this, and understanding how to spot them, and more importantly, how to interpret the reaction around them, that really empowers you. It helps you assess market information critically, maybe anticipate shifts instead of just, reacting to the latest headline. It lets you see past the daily noise, hopefully, and start forming your own, more informed view on where things might be heading. Something to think about. Until next time. Keep diving deep.